Insurance company Sanlam has acquired an indirect stake in Nigeria's Oasis. Thabied Majal, who is Corporate Development Executive at Sanlam, joins us now for more. Good afternoon to you. Give us the setting for this, Thabied, why you went into this deal and the landscape of it and the size and so on.
Hi, good afternoon, Dave. I guess the setting for this, we entered Nigeria in about 2010, where we went into a joint venture with FBN, an established FBN Life. So our entry into the Nigerian market's been via the Life company, and obviously I think part of our strategy is really to deepen our relationships with our existing partners. And in an effort to diversify our product set, and offer our clients more in Nigeria, we entered into this transaction by buying a general insurance company, Oasis.
What sort of homework do you have to do before something like this? I mean, it probably is considerable.
Yes, it is. I guess if you start, kind of, at the top of the funnel, I think when we look at entering a market, we look at certain things. We look at good economic growth, political stability, and obviously, for us being in insurance, low insurance penetration. And once you kind of identified, narrowed it down to the market, and then it's a very laborious and difficult process to kind of find the right partner. If you look at Sanlam's model, our model is really premised on finding good local partners and using their infrastructure, their brand, their market knowledge, and obviously a company that shares the same values. So it is a long process to firstly identify the right partner, and once you've done that, and you've got a successful partnership going, it makes sense for us then to deepen our relationship with our partners.
How big is the stake in terms of influence? Because obviously a small stake might get you a bit of revenue, but it needs to be big enough to influence the way the company works. And that could range from
Yes.
complete takeover, full ownership, and you impose your ways on it. It could be a 50-50, 51-49. So where on the scale is this? And to what extent do you take what you do in South Africa with Sanlam and you put it in there?
I guess in terms of influence, we do have a 35% stake in FBN Life. So we do have board representation, and our model is really premised on working with the local boards, entrusting local boards and the local management to run the operations. And what we really do, to answer the second part of your question, is really from a South African point of view, we cannot, we certainly don't go ahead and try and replicate what we do in South Africa. So we work with our local partners to understand the local market conditions, what the local needs are, and then we go and source the requisite technical skills in South Africa to actually take into those markets, to optimize and grow the businesses.
What have you found in terms of cultural issues, language issues, infrastructure issues, often underestimated when you think you've got a good brand? And some companies have gone into Africa, burnt their fingers and had to retreat and rethink. So what are some of the lessons you've learned?
I think some of the lessons we've learned is to be humble, is to entrust and empower the local management to run the country, to run the company. So we don't try and impose, this is how we do it, or even adopt a thou shalt attitude with the local company. So it's really working with them and given their understanding of the local market and the local market conditions. And the way we do operate is also using the local brand. So I think fundamental to the way Sanlam has expanded into the continent is on the basis of partnerships. And in most cases, I mean, we enter in the majority, we have a majority stake in the partner, and in some cases minority. But we found that across the continent, that the partnership model sits at the heart of how we want to expand into the rest of the continent.
You must have made some projections, and maybe you can give me a big picture idea of what they are. So, you know, the dominant part of your business remains in South Africa, but down the line, 5 years, 10 years, 15 years, you'll obviously be hoping for strong growth in the African continent. What kind of expectations have you got?
Yeah, I don't think we have any set firm targets. I think if you look at the overall group strategy, I mean, there's still pockets of growth in South Africa, but kind of at the forefront of the group's growth strategy is the emerging markets, of which Africa is the most important component. So, no, we haven't set fixed targets to say, you know, our international business should form 20%, 30%, whatever the case may be, of the profits. but it's just to say that's where the growth opportunities are in the continent, and from a Sanlam perspective, we say on the African continent, in India and Southeast Asia.
In terms of regulation, governments, in your sector in particular, financial services and so on, we know in South Africa we have a first-class sector. There are lots of rules and regulations, and our companies are good at working with them. What's the regulatory environment where you are there, and how much work did you have to do on that?
It is a very challenging regulatory environment in most of the markets that we operate in. And I think that's where we have the benefit of a local partner like FBN, who have been doing business in Nigeria for many years. FBN Bank is the biggest bank in Nigeria, so we're very reliant on a local partner to keep abreast of the regulator. I think part of what we do is obviously try and influence the regulator and try and influence and shape the industry, because what we find in most of these countries, the industries are still developing. So we can actually play a role in influencing and shaping the industry and the regulations.
Fascinating stuff, and clearly the start of a long journey. That's Thabied Majal, who is Corporate Development Executive at Sanlam.